Hello, everyone. Welcome to the HomeGirl Tuesdays at 10, where I bring you weekly bite sized, digestible pieces of information that you can take with you along your home ownership journey. This is the HomeGirl Sherrell Wright, and today is Tuesday, February 25th, and I am so excited about today's topic. Because I'm going to piggyback off of my live event that I hosted on last Thursday, where I was talking about the disparity in home ownership rates and the wealth gap in the Black community. And something that I kind of hinted on last week. Was trying to help us be in a better position for home ownership. So I covered a few different topics, and something I want to share today is just to reiterate what those three key factors are when it comes to home ownership. All right, so let's go ahead and dive right in. Those three things, and I remember working with the lender about 5 years ago, and he literally would like drill this because these three things are so important when it comes to you being able to buy a home. These are the three things that you want to check because this is what lenders are checking for when it comes to your approval. Okay, so they are income, assets, and credit. So when it comes to the income piece, they basically want to know that you have a job or you have a way to pay back the mortgage that they're going to give to you for the home. So if you didn't know this, whenever you purchase a home, you're actually getting a loan, and that is your mortgage. The lender needs to assess your ability to pay. So they want to make sure that you're making steady income. They also want to make sure that you have some type of way to pay back that mortgage. And that's usually verified through your job, and they will verify your employment, FYI. So you cannot not be truthful. You want to be truthful because what you say will be verified. So they want to have your most recent pay stubs, and they also want to see your most recent bank statements. And that's to make sure that you are having income being deposited and that you are working and making what you say you work. So they do want to verify your income because they want to make sure that the loan that they're about to give you, that you can actually pay that back. You can afford the mortgage. Next, we're going to talk about assets. So your assets is anything that you have on hand that is considered cash, or it could be liquidated. Meaning, if you have a savings account, those are assets. If you have a 401k account or retirement account, that's an asset. If you have an IRA, that's an asset. So anything that you can pull money from. And in some cases, what happens is if you're selling a home and you're using the proceeds from that home to buy your next home, then those would be considered, that the proceeds from your sale would be considered your assets. Why do they need to see assets? Again, it goes back to affordability. Do you have the funds for your down payment? Can you gift the funds as a gift, which that doesn't happen a lot, right? I mean, a lot of us are not in position to receive $10,000, $15,000, sometimes even $3,000. We don't have someone who could gift those funds to us. Now, if you can have those funds gifted to you, kudos to you. I love that for you. But for those of us who are unable to receive gifts from family members and friends, our assets are going to be in our accounts, in our 401k. What you have readily available to help with your down payment and closing costs. Some lenders even go so far as say that you need to have like 3 months of your mortgage payment in your account. And that's to ensure, again, that you will be able to pay back that loan. So when you talk about assets, That's what that breaks down to: your cash on hand, savings accounts, retirement accounts. If you have stocks that you could pull cash from or make liquid, that those would be considered your assets, because how are you going to pay for this down payment? Now, again, there are down payment programs out there, and I did a video about down payment a few weeks ago and what the criteria for those are. But again, if you are not seeking those programs, I always tell my buyers, you want to have your own money. You just do. In some cases, you don't, because life is what it is. But you want to make sure that you can at least pay your closing costs on your own. And you have to have your down payment and closing costs. But if you are going through a down payment assistance program, then you can kind of count out your down payment. But you do want to have your closing costs. I encourage my buyers to have their closing costs on their own without asking the seller for it. It's because if you find yourself in a multiple offer situation, and from what I've been reading, the market is changing, and we're about to enter into the spring market, and that's when a lot of buying and selling is happening, during the springtime. So if you find yourself in a multiple offer situation, you want to make sure that you give your seller an offer they can't refuse. I say that all the time to my buyers. Let's give them an offer they can't refuse, especially if you're going to be in a heated market or a multiple offer situation. So with an offer they can't refuse, that comes with you not really asking for anything and not asking for seller concession. So you want to have your own, just in case you find yourself in that situation, a multiple offer situation where there's competition. You want your offer to stand out. So those are your assets that you want to have on hand. Lastly, we're going to hit briefly on credit. You have to have a qualifying credit score. What the lenders are doing whenever they pull your credit is that they're checking for late payments. They're making sure that you are credit worthy, you're lender worthy, you can be trusted with this loan. So they have to assess your credit. Now, the minimum qualifying credit score is 580. Okay. Now, if you've been listening to me for a while and watching me and following me for a while, you know that I purchased my very first home with a 580 credit score and 3.5% down. Now, if you have to dip below the 580, there are some lenders who go down to like 500, but you're going to be bringing a larger down payment, maybe 5 or 10%, because now you have a lower credit score. So they want to account for some of that. So with your credit, you have to be at a 580. I spoke with one lender last week that they actually do a down payment assistance program and initiatives if you have a 620. So 620 can get you in the door, right, to having down payment assistance. But you have to have a 620. So you want to be at a 620, 640. You can purchase a home with the 580, because I did. And sometimes, like, if you got to do it, you just got to do it, right? But you want to aim for like a 620, 640. And the reason is because you get better pricing. There's more flexibility for you when it comes to your interest rates. You're not stuck with a higher interest rate as you would be with a lower credit score, especially in the times now where we're seeing the average interest rate, be right below 7%. So the higher your credit score, the lower your interest rate is going to be, and the better you're going to look to be approved for the loan. So if you are thinking about buying a home, if you have been having these thoughts about, like, I wonder what it takes, I have my buyer's readiness assessment. It's for $1. I have that attached to this video. If it's not in the description, then it will be in the comments. Buy that buyer readiness assessment, y'all. It's important, because what it's going to do is show you where you are with your credit. It's going to assess your finances so that now you understand where you are financially and credit wise when it comes to home ownership. So it also you can take that assessment and take it to a lender and a realtor, and now you're ready to have an educated conversation about where you are financially. And that right there is crucial. That right there is important. So we want to make sure that we know where we are and there's no guessing, and we're not walking into a situation blindly as much as you can control it. Okay, so if you've been thinking about buying a home, grab the buyer's readiness assessment, see where you are financially, see where you are when it comes to your credit. And also, if you're bold enough to have a conversation with a lender, get with a realtor. Or if you don't know a lender, get with a realtor. But if you know a lender, get with them, have a conversation, and start having conversations on what these different lenders are needing when it comes to your income, assets, and credit, because those are the three things that they look for to help you get approved. So if you don't know where you fall, or if you need a game plan, the lender should be able to help you with that. Okay, so this has been the Homegirl Tuesdays at 10. I am actually hosting another live event this Thursday, and it's still ownership, the Black History Month edition, but this time it's for real estate professionals. So I want to have a conversation with my realtors so we can talk about some things and find out where we fall on this spectrum in this industry. So I'm done now. Okay, we talked about income, assets, and credit. If you have any questions, let me know. If you have a realtor that you're working with, question them too, and ask them questions as well. Let's work together to make home ownership a reality for you in 2025. Okay, so this has been the Homegirl Tuesdays at 10, and I hope that you all have a wonderful rest of your day and you have a wonderful rest of your week. Talk to you soon.